All right, so I see our attendees are trickling into the room right now, so I'm going to give it just another couple of seconds to ensure everybody can get in, and then we will go ahead and get started.
Sounds good.
All right, so I would like to welcome everybody to the From Analysis to Action, Improving Your WIP Report with Industry Insights webinar. I am Samantha Lake, the COO of ProNovos, and today I have the pleasure of moderating this amazing panel of construction industry professionals. This panel initially came together for a discussion at CFMA's annual conference in Dallas. From February to May, they met monthly to prepare this content, and they had so much great information, but due to high levels of interest from the audience with questions and limited time during the session, they weren't able to share all of their valuable insights. So we wanted to get the band back together today so they could show you how they actually go through the WIP report and they do their analysis. So without further ado, let me introduce you to our panelists. We have Bob Biehl, CPA and CCIFP. He is the Director of Construction Industry Services at GBQ Partners LLC in Columbus, Ohio. He has been in the industry for more than 37 years. He got his degree from Ohio University. He serves hundreds of construction clients and is active in more than 8 different construction trade associations, including CFMA and CPAC. And he has also served on numerous CFMA national committees and is the past chair of the ICCIFP. Margie Morris, CCIFP, began her career in the surety industry in 1987. She's acquired a wealth of experience from working at a small surety agency to managing a branch office of an MGA to become a surety underwriter for Reliance and Travelers. Her desire to work directly with contractors is to raise the bar of what they should expect out of their bonding relationship, which then led her to the company side of joining Guignard Company in 2002. Margie, did I say the company name right?
It's okay. Guignard.
And here's where she also became a partner in 2016. Next, we have Gerardo Perez. He is the Senior Vice President and Relationship Manager at First Bank. He has more than 30 years of experience in banking with 21 years in middle market commercial lending, credit, and portfolio management in the Inland Empire. He has experience working with contractors and has a solid understanding of underwriting and financial statement analysis for companies of all sizes and complexities. And last but certainly not least is my boss, Bruce Orr. He is the Chief Data Scientist and founder of ProNovos, a construction financial intelligence company. Bruce is an early innovator of construction analytics and is helping companies nationwide leverage financial intelligence effectively, allowing them to shift their approach to financial data utilization. So for those of you who were not able to attend the session at the CFMA conference, I want to ask each of our panelists a question regarding the WIP before we jump into you all seeing how they analyze the data. So Bruce, I'm going to start with you. As a data scientist and someone who has a deep understanding of how Bob, Margie, and Gerardo are using the WIP report, can you explain to the viewers today the importance of their relationship with their construction partners, especially in regards to their CPA, surety, and banking professionals?
You know, Sam, if you would have asked me this question a year ago, I would have found it difficult to give you a good answer. However, after working with Bob, Margie, and Gerardo, here's my answer. So it's evident to me that the relationship with CPAs, surety companies, and bankers is crucial for several reasons. And let me break it down into 3 major components: trust, collaboration, and information. Again, if you would have asked me this question a year ago, the answer would have probably have been different. But let me talk about trust. Trust is the foundation, as you know, of any successful partnership. Specifically in the construction industry, trust ensures that all parties are confident in the accuracy and integrity of the data being shared. So when CPAs and surety companies trust the data provided by the construction firm, it facilitates a smoother financial reporting and, most importantly, a risk assessment process. This trust is built over time through consistent, transparent, and accurate data sharing. And collaboration is a second one. So I believe it's just essential in leveraging the collective expertise of all partners involved. You got to remember something. If the contractor isn't successful, we aren't successful. We know that construction projects are complex and it involves numerous stakeholders, each with their own specialized knowledge. But when collaborating closely with construction firms, they benefit from financial insights of CPAs, the risk management expertise of surety companies, and obviously the funding strategies of bankers like Gerardo. But this collaboration helps in optimizing project outcomes. It ensures financial stability and assists with mitigating risk. And last is this is my favorite. I mean, I love trust and collaboration as well, but information or data analytics. It plays a pivotal role in modern construction management. And you notice I use the word modern, right? The ability to collect, analyze, and interpret data allows construction firms to make good decisions consistently. So every contractor has this one individual that's been around for decades, and most of his or her decisions are based on intuition and gut feel. But imagine with data analytics, almost anyone can provide valuable insights into project performance, financial health, and risk factors. And when sharing this information with your CPA, surety, or banker, you can ensure that all partners are on the same page. And this typically leads to better financial planning, risk management, and overall project success. So, Sam, again, ask me that a year ago, you would have had a different answer.
No, that's really great. And I think that throughout this presentation, our listeners are going to pick up on how these three pillars are playing into the work that specifically Margie, Gerardo, and Bob are doing. So, Bob, speaking of you, as a CPA, how does the WIP help you best serve your clients?
Well, the WIP is obviously the first report I look at, right? Because it's it's the point that recognizes revenue that impacts the whole balance sheet and income statement. So when I see a WIP report and I see both the open and closed job schedule, I start to look for trends. I look for what we expect it to be and what it actually is. And really, the WIP report is kind of a scorecard of a couple different things. Number one, how you're doing in the field, right? How the operations are doing. What's the margin look like on this job? Are we billing quickly enough? Um, what are what does our change order management system look like? So it's kind of a scorecard for what's going on in the field, but it's also a scorecard for what's happening in the office. The accounting department and the project managers are probably jointly responsible for the work in progress schedule. I'd make the argument the project managers are mostly responsible, but the accounting department signs off on it. And why I say it's a scorecard for the accounting department is because I expect them to not only do the inputs to get the calculation of revenue and over and under billings, but also to look at it and determine what is unusual and what is deviating from expectations, and being able to respond to any questions that I have, that the surety has, as well as the bank has. And if they're able to do that, I feel a lot more comfortable in starting my audits and reviews and starting at this point.
And you are going to get to demonstrate that shortly when you start showing everybody how you look at some of these jobs.
Exactly.
So Margie, kind of transitioning over to you, with the WIP report, how does that impact your decisions regarding the surety process?
Thanks, Sam. That's a great question. And what Bob initially said was the WIP drives the income statement and the balance sheet. And same goes for me when I'm looking at a contractor's WIP report. But more than that, the WIP includes various sizes of projects, bonded and unbonded, right? And so the trends become very critical on those various size projects relative to their profitability, how they started the job, how they close the job. And that's going to drive how far surety will extend or stretch on surety credit. So if their largest job is 5 million and it was a profitable job, and then they want to grow to maybe a 7, 8, or $9 million project, you know, the surety wants to be comfortable if they're going to stretch on that project. Is it, you know, what do the trends reflect? And so the WIP report from an open and close schedule is what we really hone in on. And I know that I always call it your report card. You know, it shows how you started and ended the job, and you know, you're either going to have an A job, B job, or C job, right? Or you might have an F job, who knows? But so those are really the three or four things that drive the surety aspect of it.
So I'm starting to see a trend between you and Bob. Report card seems to be the main theme. So everybody needs to treat their WIP report every month like an assignment that's being graded, right? All right, so Gerardo, last but certainly not least, when a client or a potential client comes to you looking for funding, how does the information on their WIP impact their chances of getting a loan or funding?
It impacts it quite a bit. And I think, Bob and Margie kind of hit it on the head. I would call it a scorecard, a report card. To be honest, it really shows me who you are and how much you respect your financial information. The more robust the information is, the more notes I can turn to and access to understand where these projects stand. Kind of really leads me to what my expectations will kind of be when I'm actually looking at the balance sheet and their P&L. Because if that WIP report is just mediocre at best with little information and hard to access and take a look at, I'm going to anticipate the same for the remainder of their information, which leads me to start to question, hey, if these are bonded work, who are they working on the surety side and who their CPA is? So I start to think about their partners and who they're affiliating with, or do they actually have partnerships with their surety and their CPA, or are they just order takers that they just do work with and chat with on occasion when something goes wrong, or they need to try to get, a better picture for where they currently stand. I mean, I basically say, it tells me who you are. And it also, that report will give me the continuity of the work and what you do. Like it says, it'll show me, as Margie mentioned, where you're doing business, what size contracts are you taking in, what's that average profit margin. And it allows me to kind of get a real good idea pretty quickly of where the skew is, what their continuity, what their trends are, what their billing philosophy could be. But I think at the end of the day, it kind of tells me who they are and really shows me the level of respect they have for their financial information.
I
What you
love
just said
that
there.
phrase. Sorry, Sam, I just had to comment. I love how Gerardo said that, the respect of the financial information. That's beautiful. I really like that.
Well, I see, that's a good place to kind of delve off or tail off on, because the companies that I see are the most successful are the ones that value the accounting function, that value the relationship, the collaboration, all the stuff that you talked about, Bruce. And the ones that just want to go out and build and look at this as an afterthought and only do a WIP report because some geeky accountant or a surety tells them I need to do it once a year, those aren't going to be successful in the long term. Yeah, I mean, they might get a bond, they might get an audit report that's clean, but at the same time, to maximize their profitability and their chance of success, doing things the right way goes a long way to making that happen.
Absolutely.
Oh, Bob, you took the words right out of my mouth. So I'm going to move us along. So now that we understand more about how each of you are using the WIP report, we're going to look at some data. So that way our viewers today can start understanding the red flags that you all look for and the criteria that you are using when determining loans, if they're going to get, bonds, compliance, and just overall ways in which you could help clients do better on their jobs. So to do this we're going to show you in ProNovos, but I'm going to first show you the data points on a PowerPoint slide, and then I'll jump over to ProNovos. The reason for this is we want you to be able to see all of those data points at one time. And this is my public service announcement. For any of you still creating your WIP report in Excel, I urge all of you to look into a solution that uses automation, whether it is ProNovos or another tool. It's going to save you so much time, and it's going to give you a way of looking at your financial data that allows you to gain deeper insights and see patterns. And that's one thing you're going to hear our group talk about today. So this sample data, we have scrubbed it, but it is real client data. So For this presentation, it's going to be subcontractor data on the West Coast who is making roughly $10 to $25 million annually. So Margie, we're going to have you look at our first job, and this job is 3 First National Plaza. And here we can see all of the data points, and you can see our experts today wanted to use several different columns, everything from original contract all the way to bill to date and overbillings. So for this first job, you can see we're starting out at $517,000. And the projected final cost is exactly what the original contract stated. So I'm going to move us over into ProNovos. And Margie, I'm going to let you talk about this job and like what jumps out at you.
Thanks, Sam. So, when you first look at this project, it's a small job, right around $500,000. And it's starting out saying they're going to make 30% profit. It's a pretty good profit margin. And so, you get excited about seeing that, and then you start looking at the projected profit margin and it dropped by 56% and it's 90% complete. So, you could look at the percentages and say, well, that may not really mean a whole lot, but when you actually look at the dollar behind it, 30% margin is about $156,000. And then the projected profit margin is half of that, $67,000. That's a big, swing down how much, you're losing a lot of profit in between that. So when I look at this project being at 90% complete and the profit margin has drastically reduced, I'm going to wonder or ask the question, is it going to fade anymore? Is there going to be any more profit slippage? And so it's okay if it's you're always going to have those bum jobs, but if that's the case across the board all the time, you have major profit swings like that, then it becomes another question on how are you putting these jobs in the beginning when you get your budget or your estimates, and how are they being viewed? And so that would drive you back to what kind of systems are you using? How are you putting the data in the system? And so that's what jumps out at me on this particular project and the questions that would come to mind. There were no underbillings on this job, so that's not something that I would really look at. But the 3 areas would be the original profit margin, the projected profit margin, and where they are in the status of completing this job, and how are the other jobs comparing at that point.
And so when thinking about, the bonding process, one job obviously isn't going to like make or break. Well, I'm going to assume it's not going to make or break. So correct me if I'm wrong, but like, how would something like this impact your decision-making process?
Well, the bigger thing is if they're showing, one period, they're earning all this revenue and earning all this profit, and then there's a constant fades and stuff, it's going to impact somewhere along the line, either in the beginning or the end of a financial, right? And so I think it's more of, if the trends continue to always reflect that across the board all the time, then I would have to dig in, because it would make me be more conservative. It would make the surety be more conservative on how far are they going to extend surety credit to a contractor. They're really going to then look onto the balance sheet and look at, what does the balance sheet represent? What does the income statement represent? So, but at the end of the day, the surety is bonding projects that are on your WIP report. And if you want them to continue to bond, you need to continue to show, steady trends, not, like a heartbeat trend, not you're going to have the one-offs, like I said, but one way or another. But when it's continuous, you have to look at how the job's being estimated, how the internal controls, internal systems. It really goes back to that. So, and that's going to, like I said, that will determine how far surety is going to extend credit.
No, those are excellent insights. And just for the group here today listening, if you have any questions, please feel free to use the Q&A feature within Zoom, and I can certainly ask our panelists those questions. All right, so Bob, let's go on to this next job here. It is the Southeast Financial Center. So we're seeing this job sitting at, about $630,000 as the original contract, and its projected final contract is the same. So similar in regards to the job that Margie just looked at, but when you look at this data, what questions come to mind and what story is this data telling you?
Well, much like what Margie said, all this is about credibility too. And the estimated cost to complete is the biggest unknown factor when we're talking about any contractor's WIP report. So if you start and look at the original profit margin of 34.5%, and then we see a projected profit margin of 44.6%, we're thinking that's great, right? Everything's good. We're making a lot of money on this type of job, more than the one that Margie just looked at. But as we delve deeper into it, it looks a little bit different story, right? This thing is showing projected final cost of $350,000, but it has job cost to date of $405,000. How can that be? The first thing this tells me is whoever's putting together the WIP report is really just doing a mechanical exercise and not looking at the actual results. And I see that too often times where it's not using this report to its fullest and understanding what it actually means. Maybe they don't know what they're doing, maybe they don't have time, but this can be a big problem here because, we obviously have a bad projected final cost, which is the key number in recognizing revenue. So the question becomes, is $405,963 the final cost because it says it's 100% done, or is the number 450 or 475? So we have to go back to the project manager and talk about what is that actual cost. The other thing that would cause me some concerns, and I know this wouldn't happen in ProNovos, but it does happen with Excel, is we have a negative cost to complete. The 405 would give us typically a percent complete of 110 or 120% on an Excel, and recognize a different amount of revenue. So we need to look at what is causing this and get the actual correct numbers on this WIP. The other big thing that I see in this job as we kind of look forward is, is 100% done is what it says, but we have an underbilling of $127,000. So how can we have an underbilling of that much at this stage of the project, right? We have an unapproved change order that we may or may not get paid for, but we're recognizing revenue, so we're going to have a reversal back out at the end. Is there a problem with the job that maybe there's going to be some back charges or something that's going to reduce our revenue? Margie made a good point about internal controls and processes. The one thing that I will want to say is when we see a lot of fade as a CPA firm, we got to question whether the estimated cost to complete on the current WIP schedule that we're looking at is accurate, because that's the whole essence of revenue recognition. And if contractors consistently miss the estimates that we're telling them, even next year, we can't rely on them, and we might have to go and actually reduce them down to be a little more conservative and accurate in what we think is going to happen.
So was your client, as their CPA, what would you advise them on this job specifically?
Well, I mean, there's a couple things, right? And I mean, we are doing this for ProNovos or whatever source you're doing. I do think automation is the way to go. It's the future. It just is going to eliminate so many mistakes, right? First of all, I see so many keying errors when I'm looking at WIP schedules that are done in Excel, whether it's transposed numbers, picking up the wrong numbers, or whatever, or a case like this where we're actually having variations that go above and beyond our cost to date being more than our projected costs. So automation will help this, but if you're going to use WIP schedules, make sure that you have some safeguards in there, add if formulas, any of this type stuff, to make sure that you get to a point where you can't have these situations. Because what I would see happen is this job would be 120% complete according to the Excel spreadsheet. Take 120% times the contract amount, and you'd end up recognizing more revenue than your contract, which we all know is wrong too.
And Doyle has a question for us. they are wondering what happened to the original, what happened that the original contractors let scope change to question. So I know we don't know this, but is that a guess that you would take, is that it might have been a scope change?
On this project?
Yes, I believe that's Doyle was asking about this one.
Mhm.
Yes, I mean, it could be. That's, well, you know, you would expect if there's a scope change, you'd see an increase in the contract value too, right? A change order. But in this case, it just looked to me like they're either they haven't recorded that change order, which, you know, would be the best solution, or they're just inefficient or having problems, and that's why the cost went over. But either way, you need to update that actual cost at completion or final projected cost on a regular basis. And I a lot of times don't see contractors updating that number often enough.
Sam, on this one, just something I would add is underbillings are part of working capital. And the surety would, at that point, because the job is 100% complete, would discount that out of their working capital. So at that point, until they could proof it up, that underbilling is legit. So
Well, typically underbilling show, you know, they're not always this way, but they're a sign of hidden losses, right? And that's why they would do that in that case.
All right, well, let's move down. We're gonna skip a job. Let's go look at Carnegie Hall Tower. So Gerardo, this one's for you. When looking at this data, what are you seeing?
Just, you know, a few observations from what we would see here. I mean, you know, the job is 59% complete with no changes to the original profit margin. I think overall something similar to what Margie and Bob are saying is sometimes these PMs or they're inputting information into the system and it's very mechanical. So as we go through the numbers and we're checking through it and you see something highlight, like, yeah, you're almost 60% complete on a job and not a lot has been updated or changed since the original start of the job. Is it just lack of concern? Is it just, like I said, a mechanical thing, which leads to, you know, when they're doing it mechanically, you're going to have input errors. They have no understanding of what impact those numbers truly have to the numbers there. You know, big part of what I do when I'm going through this, and, you know, when I see large overbillings or, you know, could there be hidden profit? You know, it's really not my job to guess or assume as a financial, as a financial, bank to them as I'm lending money to them. This is where my level of patience, if I'm seeing this as a continuous pattern through their WIP report, I tend to roll my eyes a little bit and I immediately start looking for, hey, did they provide me supporting information, notes on these particular projects? Or is this a normal trend for them where I'm going to be sitting there and looking at these same type scenarios, 40, 50, 60% done, profit margin hasn't been updated, overbillings, and I looking at the trend of what they're doing over or under billing. And I'm just not finding a pattern or a system from them to work with. That really just immediately, just not this particular project here. If I have to go back and go to this project and ask 4, 5, 6 questions, and I find myself doing that with every single project I'm going through, the pattern becomes your lack of concern for that WIP report and understanding the impact of what it is for your company. I mean, so you just run into the doubt of, are there cost, overruns? Are there hidden profit? What are they sandbagging here? What are they not showing? And that just creeps into a little bit more doubt. And unfortunately, in this current, economic environment, banks are being scrutinized from the federal regulators from a very high level now. And so that A+ client contractor I have now is probably an A now. So we're having to dig in deeper and ask these questions into what they're doing. But we don't want to see, if this is a one-off situation that I can come in and get questions, get answers, that's great. But in this particular case, you see some things that would stand out, large overbillings, and you go, what's happening there? On this particular, it's not a large job if you think about it, at 880, kind of like not small, not large. It's kind of in the middle there. It's something they can manage size-wise. It works well. But the reality is that really starts to concern me the more and more I see it per job. And I'm looking at the bottom line, the total numbers of profit. You know, at the end of the day, I'm looking for cash flow. That's my job. And the larger the job and the more issues I see with the jobs, they can have the cash flow there, but do I really have faith in what they're showing me in that WIP report?
So I think that that goes back to what Bruce said at the beginning with those three pillars, and it
Yes.
erodes your trust that you have in this contractor.
Right. I
And
mean, you know, I joke it's, you know, seeing something like this is, you know, just as bad or worse than, you know, getting a balance sheet that doesn't balance.
Gerardo, you brought up, you talked about, PMs and sandbagging, and we know PMs play such a vital role to the WIP reports. So do you think that, I mean, this is hypothetical, but do you think that, the PMs, when they're doing their overbillings, underbillings, that they understand that their decisions and how they are running that job could impact the company's ability to get loans or to, get bonded? Do you think that that's going through their minds, or what do you think is driving their sandbagging like behavior?
Unfortunately, my opinion would be is they're not thinking so much of the company, but they're thinking of their own bottom line and what their bonus will be based on how they get that one particular job done. So they're not thinking on a broader scope, nor are they really ever looped in. I don't think the PMs are educated enough to understand what they're trying to accomplish, or even whether or not the company has a $3 million line of credit or a $20 million line of credit. You know, they just don't know. They just know we need a project, we need money, we can borrow it, it's always there. But that information that they're putting in does have a massive impact to what Margie is going to see on the surety side there and what I'm going to see. And if they don't understand that, I just think there's got to be a better level of communication and education for these PMs. They may have some basic understanding from an accounting perspective, but I don't think they understand when inputting these things, or overbilling or underbillings, or, you know, bidding these projects correctly, as correct as, you know, as close as they can. There's always an airball component to there that nobody can account for because, you know, it's in this estimations. But I think there should be I mean, maybe it's too much, but at least a monthly or quarterly meeting between the PMs, the controller or CFOs, and kind of sitting down and understand the impact of the project for that particular time frame and what that's happening. And especially if you're coming up this time of year and you're with your bank or your surety and you're trying to increase your bonding capacity or increase your line because you're renewing that, well, then these projects and the information being provided got to be on point. They've got to be little to, I'm not going to say ever no questions, but having the technology and scaling up, utilizing services like ProNovos. And I've seen your guys' programs there where you can break it down by PM and what their average job is, how they're working. And you can identify the strong ones to the mid ones to the ones that may be struggling a little bit, you know, and also understanding, putting notes into those projects so that we're not having to guess or assume. Because if I start to have to guess and assume, you better guess and assume that you're probably not going to get what you were looking for.
Love that. All right, so let's go look at another job. So let's go take a peek at the Heritage Plaza. And Bruce, this one's for you. At first glance, there doesn't seem to be anything unusual other than the contract value in this one. Let me move some screens out of the way so I can see. So the contract value we see on this one has increased, and there's a small profit fade. But as a data scientist, looking at this job in the context of all the other jobs in this WIP report, what would you advise this company to be mindful of?
So it's interesting going through this exercise with the three of the other people on the panel. And I'm also going back to Gerardo's comment about having respect for the data, and integrity comes to mind. I think that when you're looking at this information and you start to interrogate it, you start to ask questions of it, you begin to understand the context behind it. So when I look at this particular project, I think of a few other things, not just the contract amount, but I'll definitely talk to that. So, you know, the original contract, $892,000, and it's been revised to 1.3. So this indicates a significant change in project scope, as Dole asked, or just additional change orders. However, the projected final contract is sometimes a new concept to contractors because you typically are going to process contract change orders as they come in. And this is great practice. However, there's always something that you should be considering when you're looking at this information. And the projected final contract of 1.3 million is basically letting you know that there's going to be a profit margin decrease. It's going from 38% to 34%. And this decrease suggests that you're going to have obviously an increase in cost, or you're going to have pricing adjustments. But it's not only the margins that I would be looking at. I'll be looking at other things as well. Like, I'll do some cost analysis on this. I will be looking at the projected final cost and comparing that to the job cost to date. So as Bob talked about, the projected final cost is crucial, but yet it is the one thing that fluctuates so much. In this example, what is that? $850,000. While the job to date cost is at 547. I mean, this indicates a substantial portion of the budget that is yet to be spent. And you have to be, contractors, we know this, we have to be careful about managing this. But then you consider the cost to complete. So the remaining cost to complete on this project is $302,000. But this aligns to the projected final cost minus the job cost. So, it's good to kind of see the numbers, come out the way that it should. If we talk about historical performance, I think that's another thing that I know Margie firsthand. She has talked about this on numerous occasions, how when she's working with the client, she might be submitted information across multiple years. And sometimes I think if I just paraphrase here, you scratch your head and you wonder what's going on, and it calls in the integrity of the data. But historical performance, particularly on this job, I think the prior year revenue costs are minimum. This suggests that the project is, newly started this year or has minimum activity in prior years. And obviously, the other thing that I will look at, and I know a lot of contractors are looking at, is one financial health indicator, and that is your over or under billings. Over billings of what is that, 15,000, with no under billings, it suggests that the project is in good position regarding cash flow, having received more cash than the earned value of the work performed. And you show something like this, and you probably are going to get bonded and get a loan from Gerardo. And but my general observations on this: probably increase project scope, margin fade is on this. What I would do is recommending three things, and I think that this is probably like general for all projects, but monitor costs closely. This ensures that the remaining budget is sufficient to cover the cost to complete and avoid, further margin fade. And then cash flow, manage cash flow. So, when working with our clients, one thing that pains me mostly is, well, two things actually, but I'll just talk about cash flow, is when you have a job that the contractor is financing. While you might have other jobs that are doing well, and you could probably pull from those jobs, I think that whenever we see cash flow suffering on a job, typically it is because of bad billing practices. And the last thing is analyzing change orders. We have a great module that helps contractors analyze change orders. It investigates the reasons behind the increase in contract value and ensure that all change orders are properly documented and approved. So that's my 2 cents on this job.
Well, thank you for that. That was really comprehensive. And I'm gonna throw it back over to Margie now. Margie, let's go look at a job that's Not as simple as the one Bruce just described. So we're going to look at the main at Texas, and me not being an industry expert, I see a few red flags that initially jump out at me, but I'm curious to know what you're seeing and what questions you might have about this job.
So on this job, initially they were showing an original profit margin of 30%, and now they're showing that they're going to lose money on this job. So for me, what I would probably want to know is I always see quarterly financial information. I don't want to see annual financial and then be surprised. So I'm curious about how fast did this project go from being profitable to turning into a loss. So the quarterly information would allow me to probably have that conversation quicker with the contractor. Number one. The other thing I look at here is, the job is billed more than the contract. So there's definitely something that's happening here on this project. Could it be undisputed change orders, or, pending change orders, or a missed estimate? So there, at this point, I would say if I saw this job and it was losing money at 48% complete, I would probably flag it and finish up all my WIP analysis and then tag the projects I want to talk to them about. And this one I would need more detail on. Is this the ceiling of the loss? Getting in front of the loss is the key. And having the quarterly information allows you to have more frequent conversations with the contractor. So it doesn't matter if you're a one-time bond user a year, or if you actively need bonds. If you're running this financial information reporting and stuff like that, you should just automatically give it to your bond agent, because at that point, again, no one wants to be surprised. And so that's kind of the two things that I'd be looking at here.
In our preparation for the CFMA session, as well as this one, one of the things that we talked about for all of your industry partners is to have those open, honest conversations with them. Like, they are here to help you. And so, Margie, one thing that you saw often, and this job could maybe be a good example of something like this, is they don't proactively communicate with you. And it's at the very end where then you're surprised by it. And so could you just share with the listeners today about if something is going wrong, why it is important for them to come to you versus trying to fix it on their own?
Yeah, I mean, notoriously, if you have a problem, it's like a kid, you want to hide it, right? You don't want to disclose it until you absolutely are forced and have to. But that's not the case in this. It's not a negative if you have a bad job, right? Just bring it forward, rip the Band-Aid off, and talk about it and address it up front, because you have all these service providers that have a lot of experience that could help with that process, help with, whatever the problem is. One of the service providers may know somebody who could maybe help get this, back on track, or whatever it could be. And so, the communication is key. And so if you're not talking to your service providers on a regular basis, I often hear them say, well, our service providers are too busy. Well, get a calendar and plug in a coffee meeting quarterly, just to catch up, just to share what's going on. Again, if it's one job, isolate it. But if it's across the board, then there's more of a systemic problem that needs to be looked at. And so that's not something that a CFO could solely do on their own if they don't have the ear of the owner, or if the owner's not always available. And so, I would just say that, again, having that communication up front and not being concerned. The character comes in play for a contractor when they're hiding this information. And and I have my clients, they'll call me, they're like, we know you're not going to be happy with this, but we got to tell you because we can't keep it from you, right? That's the relationship that you want, because my job is how am I going to present that to the surety? My job is how will the bank do this? So let's have an opportunity to work on it and tell the story behind it together. Then we can present that to whoever else is making surety, bank credit, surety credit, any kind of credit, better decisions. And so that's all I have to say. I'm preaching a little bit, but
Love it.
Well said.
Yeah, very great, very good advice. So for the sake of time, we're going to move along, Bob. Another interesting job. Let's go take a look at Madison Avenue. And what jumped out to me was this contract size. So if this was on your client's WIP report, how would you be looking at this? And what are some of the red flags you're seeing?
No, I agree. The contract size is, look at it, it's different than any other, bigger than any other contract we do by a bunch, right? So the first thing that I'd want to do, even before I look at the WIP schedule and try and figure out, is talk to my client. And hopefully I do this before they bid it, right? And hopefully Margie would be involved as well. Although this looks like there was a change order that caused it to go from 3 million to 11 million. But I put on some presentations as to why contractors fail. And you look at the reason why contractors fail, and there are probably 8 to 10 of the top ones. They all seem like good strategic decisions when we're sitting in a boardroom trying to plot out our next year. I'm going to move into another geographic region. I'm going to go and self-perform work as a GC. I'm going to take on a contract that's 4 times bigger than I've ever done before, but so I can increase my volume. Well, that's all fine and dandy, unless you don't understand the risk involved in that. And there's risk of a contract this side. And I want my contractor to make sure they understand the risk. Do they have enough working capital to fund the cash flow requirements? Do they have a line of credit that will support that? Is Gerardo on board with maybe a special line of credit or a construction loan for this time, or whatever the case might be? They need to be proactive in thinking about this instead of just going out and thinking they're going to do a good job with managing this process as big as it is. So that'd be my first concern. Then I kind of look and say, okay, the original profit margin was 30%, now it's 9%. I assume, and you can't assume, but the reason it dropped so much is because we had this large change order, and large jobs usually have a reduced margin. But is there some hidden performance issues in there as well? And I'd want to understand that also. And then if you go over, we have a large overbilling on this job, right, of about $1.2 million. Well, that's fine and dandy to a certain point, but are they actually able to bill ahead? Or is the estimated cost to complete too high and we have some deferred profit in there? And everyone thinks, accountants are conservative by nature, and we think, well, this is good. As long as we're conservative, that's fine. Well, if this number is actually wrong, right? And let's assume that there should be no overbilling at all, and that all falls to the bottom line next year. That's 1.2 million of profit in 2025, let's say, that you really didn't earn, and it could be hiding problems with 2025. So even though it looks like a good thing, we're kicking the can down the road with profit, it still can cause problems for us as a CPA with changes in estimates and other things like that. So I just want to make sure they understand exactly why these things are happening.
So how would you advise your client on this job after seeing this and like knowing what you know about the trends? So what would you say to them to ensure that they aren't headed in the wrong direction?
Well, the first thing I'd tell them to do is make sure they're talking to Margie and Gerardo so they understand this thing, because Margie's bond might be on a smaller amount, or she might be totally surprised. So communication, as Bruce said, is very key. And then the other thing, every job has a story, right? And just because it's on the schedule and it looks a little funky doesn't mean the numbers are wrong. I just want my clients to be able to tell me what that story is. And I feel a lot better when they tell me that story, what it is, off the top of their head, or they know the answer, instead of saying, well, I need to go talk to the owner, I need to go talk to the project manager, or whatever the case might be. So proactive knowledge sharing is very important to me.
All right, so I'm going to give our panelists just another couple of minutes. We have a couple of other jobs on here. So for any of our remaining jobs, is there any job that you want me to go to, so we can point out to the group any of the trends or information that you saw that you thought that they could benefit from seeing?
Sam, just real quick on the other project that we're looking at there, the Prudential Tower.
Yep.
The main thing with that project that jumped out at me is the original contract cost is a little under $170,000 and then jumped to 1.7. So you've got an increase there, of $1 million. Which was there a change order done? Possibly that's good. How often do their jobs increase that significantly in comparison to the original job cost? And were they aware that this was potentially going to happen? Is some of the things that I always like to ask. But more importantly, you're 25% done in this job and you haven't billed at all. And so you sit there and you go, but you're listing, hey, our earned revenues and our overbillings, but you haven't billed and you're 25% in. I mean, it's a conversation to call and ask and go, especially if I'm looking at their WIP and all their other jobs seem to bill on a regular basis. I don't want to assume that this is just part of the contract. So I have that conversation with them to say, hey, talk to me about this particular job. What's happening? And Bob, you said it best, that every job has a story. Us having questions doesn't make it a bad job. I think it's that, again, proactive, be out there, tell us on that particular job, or provide us a summary of notes to these particular jobs when something significant like this comes about. I think it's something that Margie said, we don't want to be surprised. And even though I'll collect quarterly financial information from my clients, just because, if you find out that there's something wrong with this project and you're taking a 10, 20% hit on your profit margin in July, don't say, hey, I'm going to be chatting with Gerardo in September, so I'll just tell him then. Pick up the phone, let me know, even if it's one-off, because then we can start discussing, is this just a one-off job, or is this something but because there was a shift in the economy or that particular job or something that's going on that could be affecting other jobs as you go through them down the road. So I think it's just trust us, advise to us, come to us as often as you can. I always joke and tell everybody, hey, I'm not the IRS. I'm just trying to find cash flow. I'm not here to report you or do anything else, but I'm here to be your partner to help you work your way through this so that we can, meet the criteria of your surety and of your bank to get you the maximum money you need to function and continue to grow your business.
And
So Gerardo, you have a new email signature, not the IRS. Please talk to me.
Yeah, not the IRS.
Well, underbillings are my hot spot for sure. I always say, why are you underbilled? And every time I see projects that are underbilled, I'm anxious to see how they close out. If they've always closed out with a fade or a loss, then that means I can't rely on those underbillings. And when underbillings are part of working capital, I have to demonstrate that those underbillings should not be discounted in any way. And the only way I can justify that is if I can show trends showing that those jobs that were underbilled were profitable or held their profit or increased their profit margin, so that gives me leverage. But if all the jobs, especially late underbillings, if they're late underbilling jobs and you're notoriously fading and closing out projects fade, then the surety is not going to rely on those underbillings, and they'll probably take some out of discount, right? They'll kick some of it out of your working capital, and that happened when I was at Travelers. We had to do that, and that could severely impact somebody's surety credit when they have a lot of underbillings on their balance sheet. So, and you don't want to be cash flowing projects anyway. So that's my first thing is you're not the bank. So what's driving you to be underbilled on a project? A little bit of underbilling, I get it, but like a lot of underbillings, it's like, there's some kind of a disconnect. So
yeah, one job that I looked at was the Grant Thornton Tower job. It's kind of interesting. This job, again, it's a job that has a significant increase in contract value. I think it goes from $1 million to $4 million, and here we are. We see fade again. So the project has a 20%, went from 29 to 20%. Now, as everyone talked about, every job has a story beyond the data. What I also like about tools like this is, Excel is hard to understand all of the data points that brought you here on the job. Sam, I'm going to ask you if you could click on that little diagonal arrow that's next to the Grant Thornton. So what I like about this is we can now go into the why behind the change. So if you scroll down a little bit, we'll see the fate of the project, and we'll also see other things related to cost. If there were changes, we'd see that root cause breakdown, and now we're seeing cost over time. I really like to have the context behind just the static numbers on the job. How did we get here? Help me explain what's going on, because it is the project manager. They're the ones that are providing the art and science and giving you that projected final cost. And as the financial manager, the financial team that's responsible for signing off on this, they need more information. They need to know how you got here, ask better questions about it. So, I was looking at this and I was thinking to myself, gosh, there is a story. This is the story. So, yeah, it's my 2 cents on that.
Well, the other thing we talked about, like just in general, as we're looking at the WIP schedule and something that automation can do for us, we can sort this by project manager. We can sort this by region. We can sort this by whoever we want to make sure that we understand the actual numbers. I think a lot of companies make assumptions that Joe Smith is, or which one, Jack Jones is our best PM. And if you look at the numbers, maybe he's not. Maybe he gets all the hard jobs. Maybe our California region is doing great. Maybe it's not. This will actually tell us that. And yes, you can probably do some of that in Excel. You're going to need to add a couple more columns and some other stuff in there. But I would encourage you to not use this WIP as just a mechanical tool, but use it as a data decision-making tool.
Yeah.
So we have a few questions that I want to make sure we get to before we conclude. I hope I'm saying your name right. Anwar is asking, is there any independent entity or special interest group who is working on standardizing WIPs in construction?
I don't know if there's any standardization because each company likes to see different things as far as these columns go. I mean, I think ProNovos is working on it to standardize the automation and get from the ERP system into a good tool. But I have seen in all my clients, they all like different things within their columns, the information they get. There are certain things you need, basic ones, underbilling, overbilling, contract amount, and all this stuff. But I think the more information you have and that you will actually use, the better it would be.
And then Robin has a question. Robin wants to know if this interfaces with all significant softwares, Sage 300, etc. So Bruce, I'll let you take that.
It does. It does. We recognize that everyone has their preference in ERPs, and everyone's struggling with this. So yes, we built this to interface with just about all major accounting systems out there.
For anybody interested who would like to see this for themselves, I'm launching a poll right now. If you'd like to see a live demo or just get more information, please feel free to answer yes or no. Literally no pressure. We'll just put you in contact with a solutions advisor. And then you can figure out if this is a tool that would benefit your company. So we are coming up at time. I know that we could probably talk all day about this because we spent 5 months talking about it. So we boiled this down to an hour for you all here today. But I would like to thank our panelists. They have spent so much time on this topic. If you all are looking for, any advice or looking for new vendors in the world of, your CPA firms, banking or surety, I have Bob, Gerardo, and Margie's contact information up on the screen. So please feel free to reach out to them. If you guys are free, our next webinar is going to be on April 15th. It's with one of our clients, Envision Contractors. We're going to be talking about how they are using this platform to disrupt the construction industry So please feel free to join us for that on August 15th. So thank you everybody for your time, and we look forward to seeing you either on an upcoming webinar or during one of our demos.
Yes. Thank you all.
Thank
you,
you.
Sam.
Good day.
All right. Bye-bye.